Hey, Bulls and Bears, we're back with another dose of economic reality. It is Wednesday, March 1st, 2023. Welcome to March. Welcome back to the channel. And as usual, I've got a ton of news that I want to cover today. Let's start with the stock market and let's talk about what Ford is doing to try to prevent vehicles from being repossessed. We told you that repossessions were going to get bad this year. They are on the upswing. We haven't seen them surge yet, but they are getting pretty bad. But we'll talk about that here in just a few minutes. As of this recording, all major indexes are in the red. The Dow Jones is only down 47 points. NASDAQ down 71 points or 0.6%. We'll have to see how the day ends up. There's still a couple hours left. I'm recording this about 11 a.m. Pacific time, and we close the market here at 1 Pacific time, 4 on the East Coast. But yeah, the Fed could come in. They could buy up this market at the end of the day. We'll have to see. And we'll talk about Ford in a couple minutes. But Ford wants to have vehicles that basically help repossess themselves or help the vehicle get repossessed. So self-repossession is what some of these articles are calling it. I know it sounds crazy. We'll talk about that in a minute here. But this comes on the back of this news. Car debt is piling up more as Americans owe thousands more than vehicles are worth. So we all knew this was coming, and it's here. So a lot of people underwater right now. They paid exorbitantly high prices in 2020, 2021, even last year. Prices are still, even now, prices are still elevated now. People are still paying high prices for them. But now with values coming down slightly, these people that severely overpaid, and let me add, at very high interest rates, most people financing their vehicles, so many people are underwater. This report is out of Bloomberg. And the article begins like this. Chris Martin already knew he needed a bigger car for the birth of his fourth child approaching, but he and his wife are already $14,000 underwater on their two vehicles. Wow, $14,000 underwater. So that's going to be some trouble because a lot of people use the value of their vehicle for trade-ins to get a little bit of cash to pay down a down payment on a newer vehicle. Now, those buyers are going to be gone for all these people that are underwater. Not all these people. Some dealers will still work with you, but two vehicles that are $14,000 underwater, $7,000 each approximately. You know, the balance could be a little more, a little less, but good luck trying to move up to a better vehicle and have the dealer roll that debt into your new loan with that type of being that deep underwater, that type of vehicle debt. It continues. So the couple proposed an unusual 2-for-1 deal with an Atlanta area auto dealer, trading in both of their vehicles so they could afford a 3-row Ford Explorer, and a new kid on the way, kid number 4. Their total loan after factoring in negative equity, service contract fees, and other costs ballooned from $49,000 to $66,000. So essentially, this car dealer is giving out a loan or getting people into a loan. We'll have to, I don't know what bank they use. It doesn't say. Maybe it was in-house financing. $66,000 for a Ford Explorer. Even if that was a new Ford Explorer, that's ridiculous, folks. All right, still on the topic of the cost of vehicles, payments, loan payments, car payments, and now vehicles getting repossessed. That's on the uptick. Here's what Ford is doing. Ford files a patent for self-repossession features on their vehicles. Ford files patent for cars that can repossess themselves. That's the headline out of Autoblog. It's also being reported out of Business Insider. What they would do is they would make the car less functional if you're behind on your car payment. One thing they would do, it says here, first they would disable certain features like GPS and air conditioning. Imagine if you lived in Arizona and they stopped your air conditioning from working because you're behind on your payment. Also, they could make the stereo stop working and add in an annoying sound that the driver cannot turn off that comes out of the stereo. This is really things they're talking about doing. Ford stopping repossessions or making it easier to repossess. Not really repossess. I don't know why they give it that headline. Making it less desirable for people to be behind on their car payment is more like what it is. But actually, it gets worse. There are some repossession features in addition to just having those annoyances, right? So the other thing they could do is stop the car from being driven out of a certain radius. So another thing they could do is stop the car from being driven outside of a certain radius. So if they want you to just go to work and back, they can say, okay, you're only allowed to drive here. They will be able to disable your vehicle remotely. I know this feature is already available in some cars, but they would also have tracking to make it easier to repossess. All right, so just think about this. So what does Ford see on the horizon with this attempt to try to get this patent on these vehicle features for disincentivizing people for being late on their payment? You let me know. Please let me know down in the comments about that one. To me, it just seems like we're losing a lot of, I'm trying to think of the word, not really privacy, but control. We're losing control, right? We have all these computer apps and phone apps. They can be disabled. They can be manipulated. The algorithm could, do things to where you can't be seen. Cars can disable themselves now, or somebody at the company can press a button and disable features remotely from your car. Now, what they'll probably do is they'll probably sell it as a nice feature. Oh, in case you get lost, we'll know exactly where you're at, so we'll be able to come and help you. Or it'll have this little chat function where you can ask questions about the car if there's a problem. They'll present it as a nice feature, but in the background, it'll have all these other disablements and all these other abilities that you really wouldn't want someone having the ability to do to your car. All right, let's move on here. Separate topic, but still on the economy. The Federal Reserve, the U.S. could enter another credit crisis if student loan debt is not forgiven. Another credit crisis if student loan debt is not forgiven. So it sounds like a threat. Somebody out of the Federal Reserve basically trying to tell the administration to cancel this student loan debt. Now, first of all, is the student loan debt being canceled, is that going to fix the problem? Are colleges going to lower their price knowing that students are getting their debt forgiven or erased? No, the colleges already have their money. Once the student takes out a loan, the school is paid. So if the debt gets forgiven after that, that's not going to hurt the school. So will it make schools want to lower prices? No, it's probably going to make them want to raise prices. So now, if you're deciding what the tuition should be, you're going to say, well, let's raise it higher because they're just going to forgive the debt anyway. No one's going to be on the hook for this. So as long as they get approved for the student loan, why not double our admission price? And it's not going to matter in the end because it's just all going to get erased. So it doesn't matter if it's double or triple the cost. So why not just raise the price? So that's what's going to happen, folks. There's no incentive here for colleges to lower their price. When it's harder, when it's more difficult for people to get loans, that's when prices come down. So if they made it more difficult for people to get these student loans for students, then prices would crash. The price of education would crash if that were to happen. But of course, they don't want things to be more affordable because they want to have people dependent on handouts, dependent on assistance, dependent on forgiveness. You see what I'm saying? So they don't want things to be more affordable. High prices are actually good for people that want to control you. All right, one more and I'm going to have to get out of here. You guys can hear my voice. Weird stuff going on with me. I took this probiotic. I broke out at a kind of a rash. My voice has been weird. So weird things going on with me, but I'm going to be all right. But I'm going to make this a little shorter than usual. Usually I'm like 12 to 15 minutes. So today maybe closer to 10 minutes, 9 to 10 minutes. Oregon has a bill, a law that's going to be proposed, maybe not passed, but proposed, that'll pay homeless people $1,000 per month. This is out of Fox, by the way. Legislation would pay homeless people with no strings attached. Imagine what kind of parties these people are going to throw with $1,000 a month. That's a lot of cigarettes. That's a lot of booze. It's not enough to really pay rent somewhere when you add in all the other costs, utilities, and everything else. It's not enough income to get qualified for a mortgage. I mean, you could get qualified for a small mortgage, but it's not enough to buy a home, especially in Oregon, unless you're way out, maybe in the country somewhere. But we know that most homeless people are in the city. They're in Portland. They're in Eugene. They're not in the out in the countryside usually. All right, folks, we're going to wrap this up. Hopefully my voice will be back tomorrow. Thanks for watching. What do you think about the Ford auto repossessor annoyance options that they're filing a patent for in their vehicles? What do they see on the horizon? What do you think about the homeless, $1,000 a month in Oregon? What do you think about the Fed basically threatening that you better forgive student loans, otherwise a new credit crisis could come up? It's getting interesting, folks. We're going to wrap it up here. Thanks for watching. See you down in the comments. Bye for now. Peace.